As you know, we have been very bullish at the price of gold, and we actually think it's going to go a lot higher over the course of multiple quarters and ultimately years. But I think in the near term here, we're starting to get to a point, at the very least a psychological point, that may ultimately call for some consolidation. I also see a lot more pundits out there that are getting bullish and calling for very high price levels. And I think that's typically kind of where you see sentiment get a bit frothy. So let's take a quick look at this. For perspective, let's start off with our trend following algorithm, the market rover, which is our absolute cornerstone tool. I'm just looking at GLD here, the GLD ETF, and you can see we got into a new bullish trend in January of last year. We've been in a bullish trend. We've had about a 50% move since, and it continues to work. So the trend here obviously hasn't broken. It's just that we're getting a bit frothy. And there's a couple ways of looking at this. Again, aside from the sentiment, which I just alluded to, we're also reaching, or we have reached, and actually now marginally surpassed the psychologically and maybe algorithmically important level of around 3,000. So if you look at XAUUSD, which is gold spot prices, so as opposed to looking at the GLD ETF, we're looking at the actual gold spot prices here. And you can see we've now reached, and again, marginally surpassed that 3,000 level. I think there are plenty of people who have been a little bit earlier in this trade, or earlier than now that the crowd's finally getting on it, and they might be looking to kind of feed the ducks, as I call it, into this big rally. I think that makes a lot of sense, and so I wouldn't be surprised if we start to see the price of gold you go back, sort of dip back below 3,000, sort of with a 2,000 handle. I don't know what that is. I mean, it's 5. Honestly, I wouldn't be surprised if we see a 10% corrective move at some point in the price of gold. That would get us back down to, maybe 2,700, maybe less, maybe 2,800. And then ultimately we take off again from there. I think the structural tailwinds for gold are still very, very, very bullish. We're starting to see, again, the more gambling kind of people coming, gold miners, silver, are starting to move higher. So that's a typically sign of risk aversion going down, meaning, again, people levering up and sort of the less informed money kind of coming in, which is great for us to ride that. But I think, again, it's getting a bit frothy here right now. So that's kind of what we see here. Now, one last thing I want to point out to you is just from a technical perspective, and this is a bit more difficult to measure, but if you look at the big move we had off of the 2018 higher lows into the 2020 highs, that was sort of the last major leg. Now, if I were to take the distance of that leg and add it to the most recent move, you can see we've actually now surpassed it. So once we started to get above 2,900, certainly above 3,000, we're now certainly surpassing that. This is a very simple technical analysis. Wouldn't take this too seriously. But again, I think the 3,000 level ultimately is going to be a psychologically important level where, yes, the media is getting on it now. Again, pundits that I call underwear traders on Twitter and YouTube are now talking about, oil, gold going to whatever levels, 5,000, 10,000. And I think that's kind of just a little bit too much too late. However, I think ultimately that'll prove to be right, but we could now fall into a phase where we actually see mean reversion to the downside first. So that's what we're seeing here in gold. Hope it helps, and we'll see you again in the next video.